welcome to the CNBC-TV18 Mumbai studio. I'm Ekta Batra. You're watching Your Stocks this afternoon. Well, it's turning out to be a day where we've definitely recovered quite significantly for the market. So the mid-cap index is just about lower by around 0.2% at this point in time. So there's been a recovery on an intraday basis there. But what really stands out is the kind of recovery that we've seen for the Nifty, which is now up around 157 odd points, above that 22,140 odd mark, inching closer towards 22,150 odd, and the Bank Nifty, which is up 454 odd points. So who would have thought that at the start of the trading session, this would have been the kind of intraday recovery and day that we'd have seen. But joining us today, we have Shahina Mukadam, an independent market expert, and Vaishali Parekh, head of tech research at Prabhudas, Lilladher, to answer all of your queries that you might have. Well, welcome to the show, Shahina, as well as Vaishali. Before we move ahead in terms of queries, Vaishali wanted your thoughts on the intraday recovery that we've seen for the markets. How would you approach it technically?
Very good afternoon, ladies. Yes, so today it's a very pleasant surprise because market has been showing a downslide every day. And today, well, as compared to the foreign markets, we opened quite okay and quite towards our support levels of 22,700, 21,800 levels. So from there, we have seen a very strong bounce back rally, and I think it looks like it's calling for signs of reversal, but too early to say. But yes, market has taken a breather and respecting the prominent support of 21,800. And likewise, Bank Nifty also 46,500. That was our intraday level, and we were pretty much there in the morning, and we are seeing a good bounce thanks to HDFC Bank and Kotak, etc.
Okay, all right. Yes, absolutely. There's been a recovery which has taken place. Any specific stocks that come to mind, Vaishali, technically that you would probably dip into at this point? Maybe the likes of Bajaj Auto, Infosys. Technically, how do they look to you reacting to numbers?
So technically, I would say Infosys is pretty much corrected. I think it is very well placed for accumulation, really time to accumulate. And in fact, so many stocks like LTY, Mindtree, even the other stocks like HCL Tech, they all have corrected significantly. So I would say that yes, time to cherry pick good quality stocks. So it's Larsen & Toubro, it's ITC, it is HDFC Bank, all these frontline which have corrected marginally, and we are getting a good opportunity to get into the stocks at these levels.
Okay, all right. Well, let's get in some queries now. We have Madhvi Lata, who writes to us from New Delhi. She holds 50 shares of Tata Motors, which she's bought at 289. So sitting on a very good profit there. She wants to know what to do, whether she should hold or whether she should take some profits at these levels. Well, Shahina, do you expect further upside for Tata Motors? You know, the buy price has been excellent. So do you think it's prudent to probably take some profits?
I suggest she continues to hold Tata Motors because as you see, the overall demand for their both passenger vehicles as well as their CVs is likely to increase going forward. They're doing pretty well in the international markets also with their JLR. So I think one needs to just continue to hold it.
Okay, all right. So continue to hold Tata Motors. So that's the word coming in. And what about you, Vaishali? Do you think that there's upside? Do you think that it could probably surpass its earlier high of around 1,065?
So Tata Motors today's movement shows a sign of exhaustion. The strength would be regained once the stock moves past 1,000 levels. So I would say as long as 920 level, which is a prominent support level, is held on, there is nothing wrong with the stock. But all the same, if 920 levels break, then I would say that the strength is diminishing. So either keep a stop loss of 920 or wait for a confirmation about 1,000 levels. It's ready to go higher.
Okay, all right. Well, now Rahul writes to us from Mumbai. He holds 68 shares of HDFC Bank, which is bought at 1450. And he's a long-term investor, wants to know what levels he should probably watch out for when it comes to HDFC Bank. Remember that comes out with its numbers tomorrow as well. So it'll be important to watch. In that context, what would you recommend, Shahina?
I would recommend one continues to hold. We've seen a pretty, they've already given us the numbers in terms of the loan growth as well as deposit growth. So deposit growth was very good, and the loan growth has been disappointing. But I think one needs to look at it in a medium to longer term. And there, I believe that things should improve going forward once all the merger issues are behind them and they're able to consolidate and actually put forward the real growth, that is the potential growth that's there. And in terms of the NIMs, I think in future your P multiple expansion will depend on how well their NIMs, they're able to expand their NIMs. So I think that will be critical to watch in the coming numbers that we will see. At the same time, I think with a price target of maybe 1,800, which is 15% higher from here, and decent based on decent valuations actually on price to book basis, one needs to continue to hold.
All right. And what would you recommend on the technicals of HDFC Bank? Again, highs were close to 1760 odd. What's your recommendation on it?
Technically also HDFC Bank is showing signs of improvement. So if one has to add also add or rather buy with a stop loss of 1480, because this stock is ready to get into an upward momentum. The near-term hurdle of course lies at 1560, but above that it's ready for a takeoff towards 1600 and so on. So well, it's a buy at this juncture.
Okay, all right. So that's on HDFC Bank. That's the view coming in. Let's get in another query. Arun writes to us from Chennai. He holds 26 shares of Bharti Hexacom, which he's bought at 570. Wants to know whether he should hold or sell. Well, it's a recent listing. So Vaishali, I'm not going to quiz you about this one. Shaina, over to you on this.
Well, it's a market leader in the few locations where it is present. Of course, the parent is, we all know, is the best in category. And I think the whole overall demand for telecom in the longer term for India has remained strong. So while of course the investors make good money from the listing price, I think even from here there's substantial upside over the medium to long term, given that the fact that they can grow their EBITDA by about 15 to 18% over a say 3-year, 5-year CAGR. So it's a hold even from here.
Okay, all right. So that's a hold for Bharti Hexacom. Remember that its issue price was around 570 odd rupees and had seen a very strong and good listing. It zoomed over 72% over its issue price in just about 4 days. So that's the kind of gains that you've seen from Bharti Hexacom. And the likes of Jeffries also had a strong target price on that particular counter. But now let's get in Atharva Divekar, who writes to us from Pune. He holds 100 shares of Suzlon, which he's bought, I think, at around 9 odd rupees. Not sure, buy price is 9.2. And he wants to know whether to hold or book his profits on this particular counter. Well, before we get to Suzlon, those are the Hindustan Zinc numbers, which have come in largely in line. So the net profit is around just about in line with our estimates. Revenue is a bit lower. So that's probably what is pulling the stock down at this point in time. We have the net profit, which is coming at around 2,038 odd crores. We were anticipating 2040 odd crores. And the revenue is a bit lower than expectations. So 7,549 versus our expectations of 7,725. We'll wait by for the EBITDA figure, the operational performance of the company this time. So as you can see, the stock is recovering. There was a little bit of a dip, but now you can see a little bit of an intraday recovery which has taken place. EBITDA is better or largely in line with expectations based on the fact that the revenue was lower. The EBITDA is looking better than what we had anticipated. So as you can see, that's played out in the margins, which have come in at 48.3 versus estimates of 46%. Shahina, do you look at this stock? Any view?
I would say that, while, short term may be slightly, as you said, lower than expectations. I think if you look at the fundamentals, balance sheet is very strong. You have the return ratios, which are very strong. I think the ROC is something like some 80% plus. Your return on assets is something like 29%. Margins are good. There's a good demand for their products. In the medium to longer term, metals, is doing well. So there is no reason to actually, panic with any disappointment, if at all there is. So I don't closely track the profits that were expected, but I think one needs to hold this stock definitely for long term.
Okay, all right. And Suzlon, we had that quick query which came in. If you just want to take it up quickly, buy price 9 odd rupees and 100 shares, wants to know whether to hold or book profits.
I would say book profits because one is actually, if you look at valuations, it's now becoming expensive. It is now more than some 8 times if you look at EV by turnover. I think, you know what, the performance improvement on the balance sheet where the debt was actually brought down so substantially, it is just now one-time book, but one-time equity. But I think, you know, a lot of it is now into the price, and now one needs to look at it like a power generating company, and so valuations are expensive.
Okay, and would you have a view, Vaishali, on Suzlon?
So I would say since his buy price is much lower, I would say continue holding because anyways now results are around the corner. And technically it is quite well poised. Keep a stop loss of 37. And if the stock reacts favorably post results and all, I think it can retest 43 to 47 levels again. That would be the level that can aim to book profit.
Okay, all right. Well, we need to take a quick break now with the news that the markets are extremely stable. The mid-cap index has also recovered further. We have an advanced decline ratio, which is currently even keel, stands at around 1:1. So we'll do one thing. We'll take a quick break and more queries on the other side. Stay tuned. Welcome back. It's a good session for us, so no complaints coming in. We have a couple of gainers now from the financial space. So Bajaj Finance, for example, is your top gainer on the Nifty. So we're seeing buying there up around 2.5%. Remember, year to date, it's lost 3.5%, but now that stock is showing some amount of traction on the upside. Grasim is doing well, so that stock is up around 2%. We have traction coming in from M&M as well. So that stock is up 2%. UPL is giving it company. Remember, UPL has been quite a rank underperformer this year. It's down 16% year to date, but is showing some amount of momentum on the upside today. So it's really sector agnostic in terms of gains. On the downside, what is losing is definitely the IT space. So HCL Tech is down around 1.4%. We have TCS, Infosys, both the stocks also sluggish, showing a cut of around 0.5% at this point in time. So that seems to be playing out within the Nifty space. For the broader markets, like we pointed out, it's been a mid-cap recovery that we've seen. Just want to point out that there's a lot of volume and price action in stocks such as Hind Motors. We don't talk about it that often, but it's given returns of around 24% this week itself. It's up around 16% at this point. Just Dial is seeing good amount of follow-on buying after its rally yesterday. So that stock is up around 6% post numbers. And Spark, just watch out for that one because it's losing ground for multiple sessions now. Remember, this is after that disappointment which has come through. So the stock is in lower circuit today as well. It's lost around 18% this week itself. But let's get in a query now. We have Pranav, who writes to us from Gujarat. He holds 10 shares of Finiotex Chemicals, which he's bought at 395. Wants to know what to do, whether he should hold or continue selling this particular counter. Finiotex at 395, sitting on a bit of a loss. Technically, do you think that it's probably going to see some upside, Vaishali?
So technically, I think it's showing some hope because we have seen the stock taking multiple supports at 200-day moving average. And now that we are seeing that, yes, chemical sector is now picking up slightly. So I would say continue holding with 340 as stop loss. And let's wait for this stock to bounce up. If it sustains about 382, 385, it's ready for, again, a target of 450 plus. So, well, we are close to the stop loss. So I think continue holding.
Okay. And what about you, Shahina?
Well, I would keep a sharp watch on the stop loss because I think valuations are expensive. It's a small cap chemical company, specialty chemicals, and while they have done very well in the last 4-5 years, I think that is reflected in the improvement in stock price. And with a turnover of just about 600 crores, I think, and valuations has now become expensive. So I think one can switch from this chemical company to some other larger chemical company. But at the same time, you keep a watch, hold it, and keep a watch on the levels.
Okay, hold and keep a watch on the levels. We have Vishal Singh, who writes to us from New Delhi, holds 50 shares of GSK, which is bought at 2,150 GSK Pharma. He wants to know whether he should sell or add more and average it out. So he's sitting on a loss at this point. It's a MNC name, Shahina. Would you recommend that one should probably just hold it for the longer term?
Well, I think the better stocks that are available in the pharma sector. If you see, Ekta, if you've seen in the last couple of years, the revenue has been flat. Yeah, they have done, I mean, the stock has given you decent returns because, of course, the quality of the management and the very, very strong balance sheet. At the same time, I think if you're looking for a pharmaceutical stock to hold for a growth stock over the next 3 to 5 years, one can switch.
Okay, Vaishali, what about you?
I would say, well, it is just right now it is a complacent stock. I mean, I'm not seeing much happening right now. So I would say keep a stop loss of 10,000. I mean, that's too low. So, well, 10,000 would be fine because I think there is a mistake. GSK means
GSK Pharma.
Just a moment. I think it's a BSC one. No, I don't have this on the radar. Sorry.
Okay. All right. All right. So that's the view coming in on GSK Pharma. Let's get in another question now. I think it's from the healthcare space itself. Selvaraju writes to us from Trichy. He wants to know whether this is the right time to buy shares of Aster DM for a longer term perspective. Well, Vaishali, a lot has happened with this particular counter fundamentally. They've sold their Gulf business. Only the India business is currently in the books, in the listed entity. From a technical standpoint, what would you recommend one does with this?
So technically, I think the stock is really showing a lot of strength. But having said that, I think one should keep a stop loss. 500 should be the stop loss and continue riding this because the way the stock is moving, I think there is still a lot of scope. It can go towards 600, 620. So 500 should be the trailing stop loss and hold for a target of 600, 620.
Okay. What about you, Shahina? Have you looked at Aster DM? They just declared that special dividend also. And net, what would you recommend to somebody who wants to play the hospital theme through Aster DM?
See, the ex-date for dividend, 118 rupees is 23rd of April, which is early next week. So I think it's a bit too late to sort of try to look whether one needs to buy it as of now. So one needs to actually review what will happen post all, the business that is there in the Gulf, which is taken out from the books, and also impact of profitability, turnover. All these things I think will have to be seen. While they did get $1 billion, and which is what they're giving off for dividend, which I think is very good on part of the management. I think that gives them a plus. But at the same time, I will now look at what is the impact on profitability. I won't buy it now. I sort of will wait, see what is the impact of this restructuring, and then take a call at that point in time.
Okay, all right. Well, Leela now writes to us from Tamil Nadu. She wants to know the recommended entry levels to buy Bandhan Bank shares. Currently at around 173. Shahina, over to you on this one first.
I think Bandhan Bank, I used to be pretty negative on it, but now when I look at the numbers, price to book is about 1.4 times. Things are stabilizing, but still there is some bit of a, degrowth sort of likely to happen over the next maybe quarters. And, the CEO, the management, we had a major resignation at the top level. I think to that extent, that correction, whatever needed to happen has happened. So I would recommend that one can hold the bank for medium to longer term.
Okay, all right. And what about you, Vaishali? You know, the stock is a little bit of an underperformer if you look at it on a 12-month basis. How would you approach Bandhan, and what is a good level to enter it?
So definitely, actually, when I'm seeing the weekly chart and monthly chart, it is showing signs of weakness. But for near-term basis, let's start with the daily chart. I mean, it is showing, exhaustion on the selling because the stock has really fallen right from 240 plus levels to now a low of 170. So if one has to buy now, keep a stop loss of 165 because this is quite likely because of exhaustion on the indicators and all. So I think with today's low as stop loss or on a safe side 165 as stop loss, one can get into the stock at least for a bounce back up to 180 to 200. From there on, we can have a relook.
Okay, all right, Vaishali, as well as Shahina, we're going to let you go on that. We're going to let you go on that note and let you enjoy your weekend. So wish you a great afternoon and rest of the day and weekend as well. Thanks very much for taking the time out. Well, for the markets, like we pointed out, in fact, the advanced decline ratio has worsened a tad bit, and so has the mid-cap index. So we've given up a little bit of gains from the top, but net on a whole, it has been a good intraday recovery that you've seen for the market. So as you can see, it's been a complete crisscross which is taking place. The market is a bit indecisive at this point in time in terms of what they want to do with the mid-cap index, but definitely that Nifty as well as Bank Nifty gains sustaining at this point. Well, that's all the time that we have on the show, but we leave you with some market opinion by Harsha Upadhyay of Kotak Mahindra AMC. But do remember to email us your questions and we'll address them with our experts. As always, stay tuned. Closing bell up next.
We do believe that valuations continue to be the primary risk for the market at this point of time. Along with that, as you rightly mentioned, the Middle East conflict also seems to be escalating. We need to watch that space. And as we have discussed in the past as well, current valuations, it doesn't leave any room for disappointment. So the earnings delivery is really, really crucial for the markets to sustain these levels or go higher from these levels. IT, as we have seen, the results have continued to be weak. The outlook continues to be really, really lackluster. So there are no real defensives in terms of sectors at this point of time. But I think banking could be one where probably the valuation risk is less compared to many other sectors. We have booked some profits in the recent times when there was a up move in the IT sector. So to that extent, maybe it will be slight underweight to benchmark at this point of time. And as you rightly mentioned, the results that we have seen initially have not been inspiring. Even the outlook that has been outlined by management doesn't seem to be inspiring confidence.